It's great to be back here at the Precious Metal Summit in Zurich with Ronnie from Incrementum and In Gold We Trust. Ronnie, it's great to be here with you.
Thanks, Peter. Thanks for having me.
It's been quite an interesting conference. We have gold not too far from record highs, but the enthusiasm is not really being represented. What's going on? What is happening? Why isn't there a lot of interest right now in this sector?
Actually, I don't know. No, I think it's. My takeaway would be that it's actually a pretty positive sign that gold is very close to new all-time highs in dollar terms. Yeah, I think it's important to emphasize because gold has been making new all-time highs in so many currencies over the last couple of months. But still, people couldn't care less. I think it's a positive sign. We're far away from euphoria, from a mania. And I think once we go above new all-time highs, also in dollar terms, I think this will start this so-called accumulation phase when the media picks it up again. Yeah, where then all the Swiss private banks say, well, you should have like a certain allocation to gold in your portfolio. But we're not there yet. Yeah. But I think the indicators that we follow, they look pretty good, and I would say this divergence between price action and the sentiment is a very positive one.
And we're definitely not seeing that in the mining equities. They are very depressed. What do you think is going to change that? You already mentioned allocation and so on. Are we near a bottom here? I mean, some of these companies are trading almost, some of them near even cash position levels. It just really feels like bottom of the market sentiment. Is that true? You see it that way, or?
Somebody once said we should leave the bottom calling to proctologists, and I think it's a good one. And I don't know if that's the bottom. I think we could or should be close. What I think makes sense, and this is also what we're doing for our funds, we just pick up the quality names at low levels. We do our homework, we meet lots of new companies. And I think, there's this divergence between, the large caps and especially the royalty names. They're not doing pretty well and they love this environment, And then in the junior and in the developer space, it's just brutal, It's just, people are really, really desperate to get some capital. And I'm not so sure if price can solve this, if gold quickly goes to 2,300, well, of course there will be more risk appetite in the junior space as well. But I think, everybody's kind of hoping for the big pivot from central banks. I do see it, but I don't think they will go back to zero. So I think on the way up, there's a time lag that we're seeing with interest rate hikes, but also when interest rates are being lowered. It takes time to really work into the economy and into markets. So I think even if they pivot quickly, I think it's gonna take time for risk appetite to really come back into the junior market.
So yesterday in your presentation here, you mentioned three different aspects related to gold. Let's talk about that. What are you seeing, and really, what's happening in the gold market right now? Because there is some big geopolitical changes occurring. There's obviously with the monetary and the interest rates rising. There's a lot happening, especially in the last couple of years. So, if you could share with us.
So the leitmotif of this year's keynote was Showdown, and this is also the title of this year's In Gold We Trust report that we put out in May of this year. And we said there are three different showdowns going on. First of all, the showdown in monetary policy. Nobody expected that the Federal Reserve will hike interest rates that aggressively. Then on the other hand, and of course nobody is seeing a hard landing now. So we moved from hard landing to soft landing to no landing, and now it's higher for longer. That's like the narrative in the market. We don't buy into that. So we're seeing a recession approaching pretty quickly, based on credit growth, based on the yield curve, based on the leading economic indicator, based on all this fiscal stimulus that was like a turbo boost for the US economy, like, having like 5 Red Bulls, 7 espresso and a line of cocaine. It was really on steroids. But this is fading off next year. So I think we're moving into a recession, and a recession is something normal within a cycle. Yeah.
Yes. Yeah.
Gold, by the way, is a pretty good recession hedge. Actually, on average it's up 10.6% over recessions. So this is the first showdown. The second one is the showdown East versus the West. I think it's really staggering if you really follow the gold flows to Asia very closely. That was a large chapter of this year's In Gold We Trust report. And just a couple of numbers. India over the last 20 years imported, I think, 18,000 tons of gold. China imported 17,000 tons of gold. China and India used to be responsible for 28% of gold consumer demand 20 years ago. Now they're responsible for 50%. So I think we here in the Western world, we think, okay, we are the big guys in the gold industry. Actually, no, I think the price of gold is increasingly being made in Shanghai, in Dubai, in Mumbai. Yeah. The numbers are staggering, and it's not only private demand, it is especially central bank demand. Last year, 1,100 tons, primarily emerging markets. This year, already 800 tons. So I think this is a major driver for the gold market. And the third showdown is actually in the gold price itself. We're seeing, if you have a look at tips versus the gold price, real rates were moving up 350 basis points over the last 18 months. If you would have told me 1 year ago, I would have told you, well, gold would be trading at 1,600 actually. It's not, and I think the reason for that is primarily that central banks are buying very aggressively. Second reason is that probably gold doesn't buy into this inflation narrative that we're seeing, that inflation is quickly coming down. We're going back to the great moderation. Yeah, everything's going to be fine again. I think price of gold doesn't really believe that.
Yes.
So those are the three showdowns that we're seeing.
Do you think central bank buying can sustain at these levels?
Yeah, I think so. Central bankers, they're bureaucrats, yeah, and it takes some time for them to really get going, yeah. But when they've started, it's going to last for a while, yeah. And the Polish central bank, for example, said, they're now at 300 somewhat tons. They want to go up to 600 tons, yeah. China has been buying like crazy recently. Turkey, obviously, but then also Singapore. Hungary was buying gold, yeah. So it's really a very diverse set of countries. So why are they buying? That's a big question. Obviously, it started with the sanctions against Russia last year, when actually the Western world said, okay, Russia, your FX reserves are basically being wiped out. And I think this was kind of a warning shot for many U.S. critical nations, yeah, that have large allocation in US dollars, saying, well, perhaps we should kind of diversify our reserves, yeah. And you can diversify into the Chinese yuan, into the rupee, into Japanese yen, whatever. But actually, you want to avoid counterparty risk.
Yes.
You want to have a currency that cannot be printed at will, that is liquid, that is traded 24/7, and that is actually accepted all over the world. So I think gold is a natural choice.
Because you can trust in it, and that's something that you talk about in it's a yearly update in
Yes.
Gold We Trust.
Yes.
And this is a publication that you provide for free. Is that
Yes.
correct? Anyone can go download it. So you do quite extensive research. What is it? I guess, this is a pretty dominant theme now. So it's a trusting. Why, when you have 5% interest rates, why wouldn't they run into treasuries, or why wouldn't they go into other things? So gold is, it's quite interesting that gold is appealing to the central banks when there are higher returns or yields, but like you said, this is a trust issue. So gold, the world there's a trust breakdown, there's a geopolitical problem here, and it doesn't seem like it's changing. So it really seems like gold is coming up to play its role now. It's time for gold to return into the international. Will we see China trading with India and Russia? Is it going to try to replace the dollar? What is happening?
The topic of trust. When I started my first In Gold We Trust report in 2007, I had to pick a name, yeah, and I thought, In Gold We Trust. That's a good name, yeah, but I didn't have an idea about the concept of trust, yeah. So a couple of years ago, we wrote one edition of the report actually about the importance of trust, not only for money but for our society. Yeah, and the thing with trust is, it can take years, decades, centuries to build it up. Yeah. But then it can be destroyed very quickly, just in a moment. Yeah, if you're married for like 40 years, and then you come back from work earlier, and you see your wife with the neighbor in bed, yeah, probably, all the trust that you built, yeah, is gone. Yeah, and it's not easy to regain that trust. Yeah, so once it's lost, yeah, it's probably lost forever. And that's why I'm sometimes working from home, yeah, to avoid those risks. Just kidding. And I think trust is essential, yeah, not only in business life, yeah, for a society, but also on the international level. So I think the sanctions against Russia, I think that marked a turning point in monetary history, yeah? Because we've seen sanctions against pariah states, Venezuela, Afghanistan, yeah, Iran. But Russia is different, yeah. It's one of the most important exporters of raw materials, yeah. It used to be one of the G8 nations, yeah. It's in the UN Security Council, and I think that this was really, the trust in institutions, in agreements, and so on, evaporated. And actually, they thought it's an asset, but then realized, well, with the stroke of a pen, it's worthless pieces of paper. Yeah. And I think, if you're China, for example, yeah, it definitely gets you thinking. Yeah? And it's not only China; it's so many other nations. So I think this is important. And I think actually we tend to like criticizing central banks, yeah. But actually, I think they helped the gold price tremendously over the last couple of quarters because, and that's also very important. Let's say the marginal buyer used to be the Western financial investor. And we can measure that with ETFs, gold ETFs, for example. We've seen 6 consecutive quarters of outflows for the gold ETFs.
Wow. Yeah.
Primarily from the Western world, North America and Europe, while Asian gold ETFs are actually up, which is also interesting. So I think, it was overcompensated, this lack of institutional demand from the Western world, overcompensated with central bank demand. And I think the real kicker could be, once we hit new all-time highs in dollar terms, I think that pro-cyclical Western financial investors will come back. Yeah. So that's kind of my framework for the next couple of quarters.
Oh, fantastic. Well, very interesting insights on the gold market. You spent a lot of time meeting with all these mining opportunities companies. So you have several funds available to investors to invest, utilize all your research, invest these companies. So give us a little information on Incrementum.
Yeah, most people know us for our In Gold We Trust report, but actually we're an asset management company based in Liechtenstein. Why Liechtenstein? Because I think it's one of the best jurisdictions in Europe, actually. We're 5 equity partners, 2 from Switzerland, 2 from Austria, 1 from Germany. We're managing 6 investment funds at the moment. I would say most of them related to commodities, gold mining. We've got an absolute return fund. We've got one cooperation with Baker Steel out of London in the mining space. We're now setting up a new fund. So we're, as it's called, an asset management boutique, but we're really happy because primarily our funds do what they're supposed to do. We've got very happy clients, actually clients that we like and they like us. They're more like partners. So we really enjoy what we do, and I hope that the viewers, but also our clients can kind of confirm that we actually truly enjoy the stuff that we do.
Well, from following you for many years, I can tell you have a good, a strong passion for what you do in this sector, and you do an excellent job with In Gold We Trust. We'll share a link with that with our audience on the video. We look forward to following up with you soon and getting an update, hopefully from record gold price territory in a much better
Just depends on the currency.
Yeah, there you go. That's right. What perspective you have. Yeah. All right, Ronnie, thank you very much for your time.
Thank you very much, Peter. Thanks. Enjoyed it. Thanks.